Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 10th, 2024. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. Already a bearish outside day right now, and this all happening in the last few minutes as inflation prices have come out. Core CPI and CPI data coming in hotter than expected, and we saw an initial flash above the previous session's highs, 2-day highs, 3-day highs, and then price dropping through the previous session's low. Now an outside day here to the downside and looking quite bearish here. We are seeing price test the previous week's low now in the ES here, the previous week's low right here, and the previous month's midpoint. Big time levels right there. A failure here and you start opening up much more weakness up ahead. So very, very aggressively bearish right now in the last few minutes as the price has gone outside day. The ES already at 98.75 points of range, 181% of ADR, and that's really significant here, especially in the opening minutes after the release of the data. We could be looking at MGR sell signals here right out of the gate. Big gaps down across the board with a continuation component. Now, again, this area right here is very important here. That's the previous month's midpoint. If we fail at that point in tremendous fashion and take it offered, you're going to start to work your way down toward the previous month's low over the next several days. If it can hang in here, there's still a shot to stay in this upper portion of the range here between 51.80 and 53.20. That's been the range here so far. So keep an eye on this area right here, but very decidedly bearish here after inflation data release. We take a look at the NQ. Similar price action here for the NQ. Big time rejection of prices above 3-day highs. Big time retest of the previous month's close. Outside day down. 168% of ADR right now and a range of 410 points. That's big time bearish sentiment here, especially after the release of the inflation data. This market right now continuing to have high range days here over the last several days, many of which have been to the downside. So clearly a shift in volatility here and also a shift in more of a bearish sentiment as the market since the high here late in March has been the high over the last 2 to 3 weeks now as we've continued to see lower lows ever since. So this market continuing to look decidedly bearish as well. Keep an eye on the previous session's low. If there's a recovery of the 18,160 level, perhaps this thing can bounce back in and stay within this narrow multi-day range here. But as of right now, very bearish move here developing in the NQ. Crude oil prices up a little bit right now, up about 0.5%. Here's the chart. Again, the previous session here staying mostly within that previous day's range. Did fall late in the session here and failed to hold the 85.50s. This market right now still remains bullish overall, but as we've mentioned before, what we've seen out of this market is the ability to rally and then kind of digest those gains. You know, move up here and then digest the gains, move up here, digest the gains, move up here, and now we're seeing some digestion of those gains here, again with an upward bias. The potential to likely go get 90 to 91.5 at some point later this month. And any pullback, even as deep as, say, 83s, could still be an opportunity for bulls to defend at some point for a continuation higher. So this market right now kind of in a holding pattern at the moment. And even if we pulled back a bit deeper here, you could see swing bulls come back in to defend. So still an upward bias overall within the trending structure of this market. Taking a look here at gold futures, you'll see right now gold pulling back here modestly on inflation data, but finding a strong low developing here off of the previous session's low. So another failed new low opportunity. Here's a failed new low that developed here last week. Big time outside day. The same could develop here depending on how strong that low becomes. But it's a good initial intraday rejection right now, and that could easily lead to an outside day up. This market has been extremely bullish, still working toward a 2400 target. At some point, we may see a slowdown in this market as it has become severely overextended, especially from the 2000 bounce here, 2000 up to 2384s. That's a significant move here over the last 2.5, 3 months. So at some point we may need to see some sort of digestion of this move. But again, like crude oil, even if this thing pulled back as deep as 22.50, it could still be a buying opportunity for a continuation up until proven otherwise. Taking a look at the YM. The YM right here seeing an outside day down as well. High range day, 160% of ADR, 675 points of range right now. Failed new high above the previous session's high and an aggressive break to the downside. This market is now testing the yearly VWAP. So that's value for the year as marked by VWAP, which began its development here on the first trading day of the year, and you've seen it kind of update. We're now testing that level. We're also below the previous quarter's midpoint here. That's just above it. Previous quarter's mid. So in just a few short days here, this market has given back half of the Q1 gains and is now failing through the previous quarter's mid. If you start to fail here, you start to fail through VWAP, you really start to open up some of the bottom portion of the last quarter's range. Again, after the impulse selling pressure here that we've seen to begin the day, keep an eye on the previous session's low. The ability to recover that low could give us a little bit of a bounce back into the range, but still decidedly bearish here in a downtrending mode here to begin April. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.